Hello guys, welcome to my channel. I'll be showing you how I do my analysis on the market. Yeah, so I hope you enjoy. Yeah, so the first thing I do when I wake up on the market, uh, I go to daily time frame. See, this is a Euro USD. Yeah, we go to daily time frame. So every day I want to go to daily time frame and look for my patterns. The patterns and the possible support and possible resistance. Yes, guys, I use support and resistance to do my analysis before I enter. So what do you have to do? You have to go to daily time frame. When you go to daily time frame, you go back. You can zoom out this. Zoom out the chart, and you go back previously. Look for if there's resistance or support in the market. So as you can see, this is it here. The market has been going up and down on this area here. Up and down, as you can see, up and down, trying to break, failing. So I go to that area previously. This is it. Go to that area and then I check. From here, you can see this is a very important area. The market came up, failed to break, go down heavy. Notice how it comes back up, breaking, closing below, going down again, coming back, failing, giving these pins, weak, go down, break. Still, this area is important. It's trying to break, it's messing with it. Sometimes you can see, yeah, the market sometimes do these things, but as long as you see what's going on there, you know what to do. Look at here. See. So what you have to do, I use this box here to draw my levels. So what you have to do, you have to draw with this box here to see. I don't use lines because lines, they can pretty much not cover everything. So the box can cover everything. So I use the box just like that. This rectangle, I made the box and so. So you draw here like this. Notice how the market is on that area right now. If it's on that area and it's showing some signs of rejection, pretty much you know the market can go up from this area. Look at this pin here. The market was coming all down with force. Try to break, leave a pin, go back up, just like that. That's how the market works. So what I need to do, after determining this support and resistance, now as you can see, I already got my support here, which is the blue line. So after determining these areas, I go to lower time frame and look for entries. Actually, now I'll go to 4 hour. On 4 hour, what I have to do there on 4 hour, I don't look for entries actually. On 4 hours, I look for candle formation, candlestick patterns. You see, you know candlestick patterns. If you are a beginner, I'm sorry, this video gonna confuse you more. So I'll be posting another videos for beginner traders to know how to do these things and stuff. Here I'm focusing on the more experienced traders here, or the traders who know a little bit about forex and stuff like that. So I want to help them with them. So we're still on daily. We go to 4 hour, and then on 4 hour time frame we look for candlestick patterns. So here it is here. What do you see? Obviously you can see price has been running around from that area, has been drawn, like drawn. You go back again, but now you don't go back that far. Look at this area. This is 14 August. This is just that. Look at how the market has been dropping. But chill here. Let me ask you one question. I know you won't answer this, but let me ask yourself this question on your mind. In all the places that the market could have turned, why did it choose this area here? Because somewhere previously there on the weekly time frame, daily, monthly time, whatever time frame it is, there was a support. There was a support here. So the market has to turn from this support. So it tested this area and it went back up again. So you go to you see, October 31. Market come back there, goes up again from that area. Notice if it doesn't try to break that area, it pin, or do some candlestick formation, candlestick patterns on that area. Immediately it does candlestick patterns on that area, knows that it's going to respect that area no matter what, and it's going to go up. This is what I want to show you here. You see here, it broke the area. Yeah, it could have pretty much broke the area and never come back like that. That's the market. But it came back and it still respected the area again. Some traders will tell you that if the area is broken like this, it's no longer valid. But to me, still valid. Because I've been watching this thing, I've been learning, giving myself time to learn this thing. So I know what happens. I know if it breaks, it can close again above the area. Or if it closes above the area, it means it's still valid. If it says resistance, it closes below the area, still a sell again. So the process still goes just like that. That's my analysis. That's what I do. Firstly, you go to daily time frame. You can go to weekly if you have time. Go to weekly, draw the resistance or support, check previously what's going on. Guess what? If I don't find this thing, I don't enter. So now this is EURUSD. I'm happy to see this. What I have to do, I have to go to the lower time frame and look for entry. That's how the market works. You just have to act like a robot on this thing. Robot. Execute what you see. Trust your analysis. And most importantly, use risk management, because that's important. I will talk more about risk management on another video. Here, let me focus on this basic support and resistance stuff. It's simple. People make it look like it's complicated and stuff like that. They show you all the fancy stuff, cars and everything, and you want to go into the market looking for those things, thinking it's a get rich quick scheme, and it's not. You're gonna blow your account if you don't use risk management and stuff like that. You gotta know what you're doing, guys. You gotta keep focused. Be determined. The only way to success on this thing is to be focused on the bigger picture. Take trading as a long-term thing. Use risk management. Focus on making profits weekly or monthly or whatsoever it's suitable for you. Daily, I don't care. If it's me, I use daily and weekly. I make sure on a week or on a daily basis, make profits. That's how it is. I'm not in a hurry. 70, 50 pips, it's enough for me. So here we go. So here, as you can see, it tried to break, but still it went up. Notice the area is big. That's why I don't use lines, those trend lines and what. I use trend lines, but horizontal lines, I don't use horizontal lines because they can be confusing sometimes. What if you draw horizontal lines here sometimes? Yeah. See? Yeah, sometimes market break each and every area. You see, this area is important, but it can break to this area. I know that. But yeah, let's just focus on that. So it went back up again. Now, notice how this peak, look at this peak. Remember, candle formation in 4 hours. This is a candle formation. This is a buy candle formation. If you were to enter here, you buy. Your target is very important. Target is as important as entry. Your target has to be 70 pips here, not here. This was in here, and not this. Not 95 pips, 70 pips. You target the recent previous point possible. This is the original previous. Yes, this is the previous. This is history, but it was on 21 November. This is on 27, and you're trading on 30 November. So this is what you should target on this thing. You enter here. You exit here. You see, the market came here. It could have went down back and break this thing, but you hold. When you hold it, you would have been hit by the TP here with profits. Let's see the stop loss here, guys. That's a good risk management. If you were to focus on searching for these kind of trades, you will be far. That's why you have to behave like a robot. Let me give you an example. I always tell people this thing. If you were to program a robot, you know, a robot can be programmed to do certain action at a certain time. If those qualities or the qualities or the requirements for them to achieve the certain action doesn't matter, they won't take action. If humans can behave like that in some way, like more specifically traders, if you're a trader and you can behave like that, you can make it. Because here, what you will do, you will look for entries like this. Entries that guarantee you a good risk reward, a good stop loss, and a good take profit. A higher take profit and lower stop loss. That's how it is. So, you take trades based on that. And you're gone. So let's look at here. Look at this P. Another candle formation. It's like 1, 2, 3, 4. Notice how this big bar was so aggressive. The way it was aggressive, it should have broken this area and went down heavy. But it didn't. Take note to that. It went back up. Market came back in again heavy. Hit the area like it's a wall. And go back up again. So this area is important. Important. Look at this mix. It's important. This is a 4-hour time frame. You look for entries here. Your target is 70 pips. 76 pips. You go to 4 hour. You go to 1 hour. This is 1 hour time frame. What do you see here? Ask yourself, what do you see? I see a buy here. Buy with good risk management. Trust me, guys, you don't want to blow your whole account. You got to go in, you got to have backup. If you have good backup risk management, you will win. Because that's what it's important on this thing. So here we go. You enter here, the confirmation. 1 hour time frame is the confirmation. If you have notes, take this down. 1 hour confirmation. 4 hour candlestick pattern. Daily market pattern. Support, resistance. Trend line. Trending. Is it trending? Support and resistance. So you wait. This is 11:52. You wait for 12 o'clock for this candle to close. If it closes like this, the way it is, execute that buy order with good risk management. You enter, you set your stop loss here, below all this low. You notice some traders will tell you that you set your stop loss here. Nah, this is not a good place to set your stop loss because the market can come here and test and go up again. So what you need to do, you need to set below all this low, all these possible previous lows, the possible recent previous lows. So good stop loss is 27 pips. Risking 27 pips to get 73. That's it. That's it. That's how you analyze the market. So now I'm waiting for this trade. If it goes on my favor, if it goes on those things that I mentioned, then I will take it. I will take the trade and I will hold it up until the end. You know, a lot of strategies work. You can undermine support and resistance and stuff like that. You're thinking, this market. Price action is important. A lot of strategies works. The most important part of the market is you as a trader. Are you taking action? Are you in the market on the right time? Are you patient enough? Are you disciplined? Because now I got to wait. I got to wait for this trade to close the way I want it to close. It's then that I can take. Am I disciplined? That's my patience. My patience is to wait for this trade and execute like a robot. If the requirements are not met, you don't execute. If the requirements are met, you execute. So I'll be waiting for this trade and I'll execute if my requirements are met. So the part of this, I have to make sure that if I enter the market, I have to be disciplined. I will not gamble. I will enter with good risk reward. I will enter with good lot sizes based on my account. That's how it is. In quick scheme. This is not a get rich quick scheme. This is a forex market. You need to be very careful. It's risky. Play by the rules. Know what you're doing. Focus. Be disciplined. Enter with good risk reward and enter with good lot size based on your account and set a stop loss so that if it goes against you, trust me, the market can go against you. Yeah, you see me drawing this support here, you're thinking, yeah, that's a solid state. You see it's solid, yeah, it's solid. It's been tested for 1, 2, 3, 4. And the previous, it's like maybe 20 times on this area, I don't know. Yeah, you see, yeah, this is a wall. Yeah, this is a wall, and you enter in hard. The market can break, trust me. It can come here and test here. 50 pips. You are out. Your account is blown. And then it goes back up. So you need to know what to do. Need to know that anytime you enter a trade, everything can happen. If you have that mentality to know that if you enter a trade, everything can happen, you will know what to do. You will know the importance of good risk reward, and you will know the importance of risk management. Because what's the use? What's the use of entering big on something that can possibly go against you? It doesn't mean you are wrong. It doesn't mean your strategies doesn't work. It works. Market is just a game of probabilities. You can lose, you can win. Pretty much it's not gambling. Because here you can analyze, you know, there are high probabilities that it will go up. So it's not gambling because the probabilities and the odds are in your favor. I'm not against you. The probabilities and the orders, just because the market has been testing these areas and going up, it means the probabilities of it going up is very higher than the probabilities of it going down. So you need to know those things. So it's not gambling. But it can break this area and go down. Because that's the market. Yeah, I hope you enjoyed this video. Yeah, you can go out and check out this trade. It's EURUSD. 12th December. Today is 12th December. You can check this trade, check the outcome and the result and everything. If I get time, I will update you on this trade. Yeah, I think I will take it. Yeah, that's it. So, yeah, enjoy. Subscribe to my channel for more. Subscribe to my channel, hit that thumbs up button, and on the section below, tell me what you want. I'll try my best. I'll try to analyze more and post good content for you guys. Because yeah, that's